welcome. You're watching Business Today Television. I'm Sakshi Patra. As 2025 draws to a close, markets have once again tested investors' conviction, patience, and the ability to stay balanced amidst sharp concurrents that we actually saw. Indian equities showcased resilience. Global markets definitely wrestled with a lot of uncertainty and volatility.
Is quite an achievement, and you have to say that domestic liquidity has won once again. I think this mega trend that started off 5 years back post-COVID has just helped our market sustain any negativity that comes our way locally or globally. So I think you have a very interesting scenario right now because the price action is at a 52-week high, whereas the sentiment is at a 52-week low. I think that's the kind of disconnect that you have right now. I do believe that as we get into 2026, things will only get better simply because you've just handled every single possible negativity in the last 6 to 8 months. And with all the measures taken up by the government, I do believe that the next couple of quarters of earnings will validate the same. And if that is to be the case, and given the way the charts are placed, I do believe that 2026 will be a good year for equity markets, but it has to be very selective. I don't think there's a case for across the board strength. You need to be in the right pockets to be generating alpha for the coming year.
I think the one question that a lot of investors are toying with is that should one stay with the winning asset classes of 2025, the supernormal returns that we saw in gold, silver, now extending to copper and other base metals, or should one look at markets for a rebound?
Well, I think precious metals have done their bit quite a bit, and I think they've come to a point where you cannot make fresh investments. In fact, we've been aggressively recommending clients to take profits in both gold and silver. So precious metals, I think, is a done trade. Unless you're thinking 3 to 5 years, maybe you can still remain an investor. But I think the base metals is a very interesting pack. If you look at copper, zinc, aluminum, nickel, lead, I think that's one space that is still developing. And I think the bigger trend will play out in the metal space, in the base metal space over the next 6 to 12 months. So stay out of precious metals, but definitely stay in base metals.
Fantastic. Now help me understand, what should investors learn from this year's volatility, and will volatility continue to stay a constant companion in the new year too?
You know, we speak so much about volatility. The India Volatility Index is at a 52-week low. It is at levels of 9.5, which is unheard of. So actually, there is no fear on the system. There is no fear on the screen because the volatility index is so low. And you know, we've got conditioned in such a way that these days market participants are unable to handle a market weakness of even 3 to 4%. I've been in this market for couple of decades now, and we've seen moves of 20-25% just like that. So I think that's the new age market participant for you who's unable to handle any volatility. But I think the way the market has handled the weakness and volatility is the clear takeaway. Stay away from adventure. I think a lot of money was made in adventure stocks in the last couple of years, and people are feeling the pinch of the same in the last 6 months. Anything with good fundamentals, good management, reasonable valuations, and good charts is where you need to be focused upon, and that's what Goldilocks does. We like to keep all these factors in mind. Stay away from adventure stocks, stay with top quality names, and be stock specific. You know, some of the sectors that we like are obviously banking, metals, PSU, auto, real estate. I think these themes is where you need to really commit capital into.
Okay. Now let's talk about sectors. In the year 2025, which sector truly lived up to your expectation this time around, and which one disappointed? And going forward, which are the sectors that are going to be on top of your radar?
You know, Sakshi, 18 months back, we actually gave a very bold call on gold and silver when nobody was talking about it. I remember I did speak about it at my event in New York and Dubai when we, made presentations. And now obviously it's become the talk of the town. Very similarly, 6 months back, we spoke about the comeback of metals. And I think I've debated with many of my clients that what is so fundamentally great that metal stocks have to do well. You've seen in the last 6 months what some of the top non-ferrous metal stocks have done, and I think they're going to do much bigger things going forward. So in my book, I think this metals rally on an overall basis is going to continue. It has so far been in non-ferrous. I think the ferrous metals will also join the party. Maybe the steel stocks will also join the party. And my working target for the metals index is about 12,000. So there is still about 12-15% upside on an index level. And I've said this a couple of times in the recent past. I feel 2026 is going to be all about PSU stocks. I think the way they are coming back, valuations being comfortable, under-owned, 18 months of consolidation, very good relative strength, amazing dividend yield, nothing to do with foreign policy. So I do believe that 2026 is going to be about PSU. I think we are going to see significant outperformance from this space going forward.
Okay. Now, you at Goldilocks have often talked about balance. So how did that philosophy really play out in your investment strategy this year? And what is your strategy going to be largely for the new year?
I think Indian equities are making a strong comeback. Even if you look at the world equities, US is at a lifetime high. Asian markets are doing well. Just to give you an example, a market like Singapore is up 20-25% in the last few months. Europe continues to be very strong. So if you have to find balance, you have to find balance in value and quality. This is what we are doing at Goldilocks. And I do believe that if your investments are a little more concentrated, you will do better. Please understand, as a strategy, diversification worked very well in the last 3 years because everything did well. But as we get into 2026 and at a 26,000 index, it's really going to be about concentration. So sticking to the top names in each of the sectors, I think is something that will really derive value.
Are there any pockets where valuations could continue to pose to be a concern in the new year?
There are a lot of pockets where valuations are a concern. I mean, the Indian market valuation itself is a pocket of concern in some sense if you compare it with the rest of the world. We now have a US product, and when I look at the valuations of some of the top US companies, I just feel that India is so expensive in comparison to with the rest of the world. But within India, I think the growth story continues, and with what the government has done and the domestic liquidity and our own positives, they are here to stay. There has been so much talk about valuations. I heard this debate a month back. I remember in 2000, when the dot-com bubble had happened and when the markets topped out, we topped out when high valuations were justified and validated. When have markets topped out when valuations are questioned? That never happens. I didn't see it in 2008. I didn't see it in 2000. So I think in that sense, I think there is definitely a lot more upside. But please stay away from that 50, 60, 70, 80 PE kind of stocks where I think most of the positives are in the price. There are still many stocks in the market in that band of 10 to 25 PE. I would be very comfortable committing capital there.
Okay. If I have to also ask you, what have you advised clients? This was also a year when investors, including global investors like the FPIs, where they pulled out money from secondary markets, they in fact poured more money in the IPO space. That's where a lot of retail investors' interest was seen. We're also given to understand the new year could also be a record year in terms of fundraise, more IPOs. We are hearing about the marquee ones, Geo, NSE that could be coming in as well. So the frenzy will again be right at top. So how are you advising clients onto that space? There's been so much debate about valuations there too, and about I think 50% of the IPOs have now slipped below the issue price in this year already.
Well, if there is a bubble anywhere, it's in the IPO market. I think it's the greater fool's theory that seems to be playing out, that when you have a greater fool to sell to, the trend continues. I do believe it's extremely dangerous to be committing capital in the IPO market, barring a very handful of names. Valuations are completely out of whack, and I think everything is being justified based on what other companies got in the past, which I think is the step in the wrong direction. There are so many brilliant companies, particularly in the PSU space, which are available at a 10, 12, 15 PE. Why would I go with stocks, new age stocks, where we don't have visibility of earnings over the next 5 to 10 years? So I think IPO market is a ticking time bomb. One should stay away from it and stay with the more typical old school brick and mortar companies where I think there is going to be far more returns in the next couple of years.
Got that. Now, since we were talking about the FPIs and the FIIs, do you see them return any soon, or will we have to wait longer for them to come back to India?
Well, I don't want to say this, but then FIs are unlikely to return anytime soon. The reason being, valuations are much more comfortable in many other markets around the world since we now track it and we are a global company. And secondly, if you really look at the valuations here and the liquidity factor, every time there is a little bit of decline in the Indian markets, it's so difficult to get a sort of an exit. I think that's a big problem in mid caps and small caps. And secondly, if you look at the world, it's just in a massive bull market, and the kind of opportunities that are developing in Asia, particularly China, which I think is a big opportunity for the next couple of years. I don't think as an institutional investor with a global palette, I would be very comfortable investing outside. But aside of that, the Indian money that's coming in through SIPs of 30,000 crores, if our earnings justify that, then at least for the next 2 to 3 quarters, we are sorted. I'm not somebody who says that the India story is going to stay for the next 10, 20, 50 years, but I do believe the next few quarters are sorted.
Okay. In the end, Gautam, what is it that you would tell as a message to the viewers of Business Today Television? What should investors do and clearly not do in 2026, regardless of the direction that the market takes?
I think stick to quality, stick to industry leaders. I think this has really worked. If you look at many of the top stocks in the market, the top performers in the market, whether it's a Bajaj Finance or an SBI or an Indigo or an Indian Hotels, I'm just giving you marquee names, not a recommendation, just an observation. They've all really stood out. But if you have been in adventurous stocks in the last 1 year, that's really not helped. So stick to top quality, stick to comfortable valuation stocks. Don't do too much. Keep a concentrated portfolio, and also try and work towards global investing. I think that's really going to be the key for a lot of market participants in India who are not used to this. But absolutely. I think the coming decade is about global investing, and I think many mutual fund managers realize that, and that's probably the reason many schemes are being launched. But a retail investor should now start thinking global.
Absolutely. Do you have, at the same breath, any list of stocks that you've devised for your clients for 2026?
Well, we do recommend a lot of ETFs. I think, for example, in the US, I can speak about it, but since there is not much compliance there, we recently recommended Hilton and Marriott, two of the biggest global hotel chains. I'm sure most of us would have stayed at some property of theirs in the past. So I think these are wonderful businesses that we like from a longer term perspective. We've been very bullish on the entire China story. I think the next couple of years, China is definitely going to outperform India on an overall index basis. So there are opportunities around the world. The Singapore market just crossed the 2008 highs 2 weeks back, and thereafter it's had a 25% move in a matter of, I think, a few months. So there are big opportunities emerging on the global basket, which obviously we at Goldilocks are tracking regularly.
Absolutely. Well, thank you so much, Gautam, for being with us on the show. It's always a pleasure to speak with you and seek all those clarity of thoughts that you always share with all our viewers. So thank you so much, and hope you have a fantastic new year ahead, and a prosperous as well as a profitable one.
Thank you, Sakshi. Thanks for having me.
Thank you so much. All right, viewers, we wrap it up on that note on this special edition of our year-end conversations with top market masters that will give you an idea to understand how to approach the new year, what are the tweaks that you need to do about the current portfolios that you have, and what is it that should be on top of your radar. So stay tuned. Throughout the course of the next few days, weeks, we are going to be focused on all the themes that are important for you to track in 2026.